Okay, so this is a replay from this morning's trade. It's around 7 a.m. my time. So the first thing that I noticed was that price was in last week's fair value gap. And then as soon as it got into the fair value gap, it started leaving wicks in there. So the candlestick that I took interest in was this candlestick, right? You can see that it closed. This is the candlestick's low, right? And then as soon as the other candlestick closed, what you can see is that price went below it, right? Went below this candlestick's low, this bearish candlestick's low. It went below it, but didn't close. But instead, it closed above it, leaving a huge wick. And this is actually looking like a pin bar, and it's looking bullish despite it being red. So we know that our price swept sell-side liquidity, swept this low, didn't close, and then it closed within this candle's range. So now my point of interest or draw on liquidity is going to be this candlestick's high. I want to see if it's going to be taken. So there is a high probability that it was going to be taken. That price is going to go to the upside. So I'm going to mark that as my point of interest, my draw on liquidity right there. So I'm expecting price to push to the upside and take it and reverse if it wants. So what I'm going to do is I'm going to go to the lower time frame, like the 5-minute right there. And then as soon as I get to the 5-minute, you can see my target is right there over the blue line. I noticed that there is market structure shift. Let me mark it out. You can see that price went above this high and that high. Boom. I know that my lines are not straight, but I don't mind that. With a huge, you see that they went price went above these highs with this huge candlestick, right? So to me that looks really bullish. That means that the chance of price going up to the blue line is high. So I'm going to mark the last bearish candle that before this move up began. So let's mark it out. So that's going to represent an order block, a bullish order block. Let me mark that different color. Okay. Let me make it red so you can see it. Okay, so there it is. Okay, so now if I am to buy, I'm not interested in buying. Like there's a chance that price is going to go up. I'm not going to enter immediately upon these candlesticks close, because I don't want to enter at the exact top. This could reverse, and this could continue the downside, or it would go up. So I'm going to patiently wait for price to come back to this level, to this order block. So price doesn't always come. It might leave me or it might not, but that doesn't bother me, right? So I'm going to wait to see price come back into this level and then take the trade. And then here's an interesting scenario. So price didn't produce like 4 or 6 candlesticks coming into the order block, but it created one pin bar with the wick touching the order block and then closing above this recent candlesticks high. So that is good enough for me. So I was to enter a trade, a short trade, entry right above there. We just entered there and this candlestick's close, and then price would have then you see what would have happened. Or what you would have done is you have gone, what I would have done is gone to the lower time frame to get a much better risk to reward ratio and entered there upon the creation of the swing, and then place my stop loss up below it, like below, like right there. I'm targeting for that targeting my high. Let's see how it panned out. Boom, and then TP was hit. So thank you guys for watching. See you guys in the next one. So if you into taking one trade per day, early morning, just like I do, to give yourself some free time for the rest of the day, be sure to subscribe and like and follow for more trade breakdowns like this. Thank you guys for watching.